Hello, YouTube. Welcome back to the Wealth Catchers channel. Definitely happy for you guys to stop by and tap in. Hopefully, you guys are having a great weekend, and hopefully, you had a great week as well. And looking forward to the following week, right? So today, we're gonna go ahead and dive into, some charting. We're gonna look at the major indexes, so stuff like SPY, QQQ, even visit the RSP. Definitely gonna look at my favorite SMH, go swing by and see what's going on with software. And we're going to close out with the memory name. So Micron, SanDisk. So let's go ahead and dive into it. We're going to start off obviously with market sentiment. So see here that we're currently sitting at greed. So we're at 63. Been at greed for a while. As you know, market's been hitting all-time highs after all-time highs. So you can see here previous close a week ago, a month ago, even similar to last year around that same time frame. This was a post Liberation Day, so you can see last year and this year for market sentiment sake pretty much mirroring each other. So right around the same time Liberation Day was going on, and then right now we had the Iran war going on. Market went for a downslide, a lot of fear in the market, and then all of a sudden kind of bottomed out. Everything is basically almost, you could say the phrase, going to the moon, right? Everything's rolling. No one's paying attention to the fact that the war is still going on. We just got CPI in that came in pretty hot, which was expected due to the rising energy costs. We still have parts of the supply chain that's being affected, by the whole Strait of Hormuz situation in terms of getting our hands on helium, things like fertilizer, and obviously prices are going to be again, slowly increased. We still have the effects of, you know, the tariffs that were put long ago. Those still haven't fully unwound and, been integrated into what's going on now. So still a lot of lingering things still going on. But as you know, market looks at it. That's yesterday's news. We're forward looking onto the next story. So that's pretty much what's reinforcing everything right now. Still keeping this new high after new high. But again, we, as you know, you following the channel, if you go onto the website, it's kind of the same narrative I'm always going to have. We don't chase. We don't, fall into victim to this euphoria and to this euphoric situation. Obviously, we love to green our portfolios. We love to see all-time highs. Like to see the high conviction names you put your money into, make you money, right? But again, we're playing this for the long term. This is a legit 5-year, 10-year generation type weighting you're trying to do, right? When you buy these names. Um, Same thing on the downside when the market is turning red, things are selling. You're not going to panic sell. You're looking for opportunities to go in. So the green you see right now in your portfolio, those are that's the payment you're getting for doing your due diligence of waiting and also still investing during the bad times, buying at a discount, things like that. So you're seeing your portfolio jump up a couple $100 in a week, or for some people, $1,000, $2,000 in a week, maybe a day, right? And that's off of buy and hold. I'm not talking for the traders because I don't talk about trading like that. Even though people they're doing their thing too over there. Day traders, option traders, your scalpers, all that. Everyone's making money right now. And, obviously, and the day to day person, they're feeling the squeeze, right? When we're talking about energy costs, when we're talking about the groceries, and there's inflation going around in those situations as well. But there's always, when these things happen, it always does bring that highlight to it in terms of those who have assets and those who don't have assets, right? So those who are seeing these green days, again, seeing the accounts jump up, these exuberant amount of numbers, right? They're feeling a little bit more, hey, I could go make that purchase. I could go buy this. They're probably feeling a little bit better than the person who is, they're being squeezed right now. The everyday person that, isn't making multiple six figures or doesn't have, that large of a portfolio. Their retirement account isn't that large. They're not feeling these movements here going on. They're feeling that movement in terms of beef cost more. My light bill is going up, gas, As we all know, we're all facing that whole issue, paying way more at gas, way more at the pump, right? So it is something that when you obviously see that market dynamic versus the real economy dynamic is always something very interesting for me to see, and also, kind of makes you be aware of how they're so disconnected, right? But again, we do see here the market is in greed. It's another thing too, a good indicator. It's not saying stay on the sidelines, don't participate, right? But it's just letting you know, hey, everyone's being greedy right now. Everyone's chasing. We saw the IPO for Cerebras went up like 60-70% in one day. There's another IPO thing that happened after it, Fevero, some geothermal company, same thing, nice little 30-40% pop on the day. That's when you start getting that euphoria. Everyone starts running in trying to buy these stocks. We got SpaceX. It looks like they moved up their IPO day, I think, to mid-June now, early June. That's a couple weeks from now. That's going to be another fever pitch, right? That people are going to be trying to scramble in. We mentioned down the line, we got Anthropic, we got OpenAI. At some point, we're going to have Anduril, Stripe. So these are all names on the waiting list to come ahead and get IPO. And then it's going to be the same repeat thing. Same thing we had years ago when we had the SPACs. All that money flooding in because everyone's so eager to try to flip a dollar. But again, don't chase. Wait for price to come to you. Wait for, moving averages, discounts, things of that nature. IPOs, I'm always going to pretty much follow the same sentiment for it. Wait your 6 to 8 quarters. So that's like a year and a half, 2 years. Hey, you miss out, you miss out. But give it some time to, make some data to at least create lines on the chart for you to look at in terms of moving averages, data for you to actually move off of. If you're talking about just strictly price, let them have some earnings, report some numbers, those type of things, right? So when we look further down into this fear and greed, we got the market momentum. We see we're well above the 125-day moving average. As we all know, as we mentioned before, when we hit that line or go below it, that usually indicates fear in the market, but also you flip it, fear is opportunity, right? That's how we have to start looking at these things. When everything's red on our screens, everything's red in our portfolio, we're down hundreds of dollars, thousands of dollars. That's opportunity for you to go ahead and find those good quality names that the story hasn't changed for, right? That you buy, hold on. So that's touching on the market sentiment in terms of how the market feels. We're going to look at VIX real quick. VIX had a little pop to close out the trading session on Friday, but we're still underneath 20. So we know usually anything below 20, especially when we get into those mid-teens, low teens, market is very chill. Market is very cool, calm. There's not a lot of volatile swings in prices. And when we start getting into those mid-20s, 30s, you start having those 1,000-point day swings in the Dow, right? You start getting S&P 500 moving 2% in a day. NASDAQ moving about 3%. Like those are very high volatile days. And that's when your VIX is very high. But also that's your opportunity. So VIX is another indicator to pay attention to. You got the fear and greed. You got your VIX. Again, you got the moving averages. None of these things, I would say, focus on it solely by itself, but pair them in tandem with each other, right? Layer them on. Whatever indicators you like to use, things of that nature, but make them all connect for you to tell the story that you're trying to figure out, right? And if it's a story that you want to run with, right? So VIX, still very good. Obviously, we start hitting into that 20, 25 range. You're going to definitely see the market having some volatility. Like I said, you're going to start seeing some names moving 10%, 15% in a day. And those type of names will be probably like things in the queues, right? Your tech companies, software companies, things of that nature, right? But as of right now, everything seems pretty good. Like I said, everyone's euphoric, everyone's happy. Everyone's like, hey, the market's going to keep running. But obviously, we're going to look at the charts, see what the charts telling us, because we did have, a red day to close out the week on Friday. Kind of some, I like to say, kind of some snapping back to reality, right? So let's go ahead and dive into those. we're gonna go off with SPY first, obviously, SPY. So this is it on the daily chart. You can see it from last time we did our video. Still had that marked out for when we hit that 253 SMA and how we rallied all the way up. I do have this marked out here. This is a gap. So we have a gap from 659 to 671. So I identified this gap because sometimes when you look at charts, I'm going to say sometimes, most of the time, gaps are going to get filled, right? Whether there are gaps, on the way up, gaps on the way down. Eventually, some way, somehow, the chart is going to try to fill in that gap. So it's not saying like, hey, next month, today, tomorrow, next week, this is going to fall all the way down to that price and close this gap up. And it doesn't even need to fall right into the box. It could just fall a couple cents below $671.46. It could fall to $671.30, right? And then boom, the gap is quote unquote closed, or it hit the gap and went back up. The issue with this whole thing with the gap situation, why you hear some people bring it up, is because there's orders sitting in here, right? So there's people who have their buys and sells that are in here that didn't get fulfilled, right? And if they still have those orders open, they're waiting for whether this to come back down, fill it, and go back up, or depends on what's in here. There's a lot of cells in here. They're going to get filled and then push this down, right? So it depends on what's sitting in here. And obviously we don't know what's sitting in here because they got skipped over, right? So that's usually when you see a gap in the chart, that's usually what it means. There's orders sitting in that block. And then usually, most of the time, the chart's going to eventually trickle down or trickle up to that gap, close it, and keep on rallying to the upside or going back to the downside, right? But obviously, hit a new all-time high here, 74.53 on SPY. And then we did see a nice little sell-off there. And obviously, I highlighted right here the RSI hitting that 75. So anytime over 70, that's technically overbought. Now, being overbought doesn't automatically mean, hey, we're gonna sell. It's just kind of alerting you to be like, hey, we might run into some exhaustion. It might cool down a bit, but you could stay overbought for a long period of time. That could go on for multiple sessions. As you can see here, it's kind of been going on. We're looking at, say, 15 sessions, probably 14 sessions if you count all this up. So it's been going on for quite a while, right? This first one right here, you sold for some reason as a trader. That probably isn't the smartest idea because, as you can see, it just consolidated with the high RSI and then just continue to rally up to the upside, right? So even if you're looking for entry points, I don't usually use the RSI for a point of entry. I'm just using it to help create my story in terms of what's going on with the stock, what's going on with the ETF, or whatever name I'm looking at. So that's what we got going on for SPY right there. Obviously, we're going to look at the weekly. So weekly definitely has that nice V-shaped look to it right here. So again, highlighted that when it hit the 72, kind of was pretty much just a sharp bounce up to the upside. And same thing right here. RSI is pretty much at overbought right here. And then where the name's going to go from there, obviously, we don't know. There's usually the narrative of the selling may go away, but look at some data that really hasn't really been a true story when you look at the past recent years. So it's kind of been like very rare to see a sell-off in May. And then you might probably see a slowdown in June, July, who knows? But most of the time, for seasonality's sake, we do know that September historically is a pretty negative month. And obviously we got midterms this year. We can expect to see some volatility around midterms. And then, we close out the year with our nice November, December rally for the most part. It's kind of what it's been. You get your Christmas rally. Everyone's in good spirits. Market most likely going to hit new all-time highs again. But that's kind of usually how the story goes. But for right now, as you see, all-time highs. Again, expecting to probably cool it off, slow down a little bit. Doesn't mean it's going to sell off. It could just end up consolidating, going sideways for quite some time, right? So next thing we're gonna go ahead and dive into is the Qs, and then you're gonna see the charts are very similar, pretty much telling the same story. On the Qs here, 253 was that bounce off, and then it has the same gap here. That gap is, let's see here, between, what's my high, 588.98 to 602.12. So that's the gap that most likely or has a high chance of getting filled. So again, that would mean that this will need to fall down to close that gap up, or at least touch the gap and come back up, right? So again, you can look at the chart. That's the thing. When you look at these charts, you're looking at how high it's gone, how far it is. You start putting in your head, there's no way that it could fall that much. But yes, it can. So that's something to keep in mind. Same thing we have to look at our moving averages. Like, oh, there's no way it's going to touch these moving averages. Strong chance, yes, it is, right? And another thing too, when we're looking at, I didn't point it out on the SPY, but looking at QQQ, we see our 50 has now surpassed to the upside, crossed to the upside, the 72 and the 100. That's another bullish sign here. And obviously the stock being above the 50, but the fact that the 50 sloped above these other moving averages, and now hopefully it's going to start staying above all of them, creating its own lane. That's another bullish sign. That's strong momentum that's going behind, this name, and also going behind the for the most part the whole tech sector, right? So, and again here for RSI, I've been working off here, showing that overbought here for the Qs. Let's go ahead and look at the weekly on it. I'm going to scroll over with this one here. So the Qs, see here on the 72, that was his bottom, rolled up. And then you see here we got kind of a doji candle. So that's kind of an indecisive candle, meaning that sellers and buyers are pretty much even on what price should be for this name. So going to look for, it shouldn't be a necessarily explosive move to either side, but most likely kind of like the next candle will determine where this is going to go, right? Like in terms of who wins out, buyers or sellers, right? So obviously for us that want the stock to go up, we would like to see this open today's Sunday. No, today's Saturday. So for Monday, come market open, we would like this to open up, obviously, and then push up more, right? So that's definitely what we're going to look forward to. And then also, too, RSI, same thing here, signaling that it's overbought. Again, highlighting maybe some exhaustion. Also, this candle here, too, highlighted there's some exhaustion here and buyers running up the price. So nothing wrong with that. And also, too, like I said, too, there's opportunity for people to go ahead and take profit, things of that nature. Let's go ahead and look at RSP. As you know, RSP is our equal weighted index. So everything in there is equal weighted, right? So NVIDIA has the same weighting as a, like a Pepsi or a Coca-Cola. They have the same weight in terms of how much influence it has on the ETF, right? So same thing for RSP, had its moments here for opportunity. How I hit 200 right here, hovered. Same thing, has its own gap as well. That gap for RSP, 194.30 to 195.95, basically 196. So that's its gap as well that we could look to see it get filled eventually. And if you can see here, 1, 2, 3, 4, 5, 6, 7 sessions ago, about a week ago, or week and change for trading days, hit its own new all-time high there. So we can see that RSP is also hitting new all-time highs. So it's kind of letting us know too that the market rally at first was kind of narrow, but now it's broadening out. So you have those other names that are also participating, right? And then also, when we look back here, the opportunity for the 200 day moving average, when it fell down here, RSI also signaled, right? So this is an example of using something are two indicators at the same time to kind of give you assurance on like, okay, see we're oversold and I hit a key moving average. That may be a time for me to deploy some capital into this name. So you go over to the weekly for RSP. And then you see for RSP, its opportunity on the weekly was hitting that 50. And then you see we have some consolidation happening right around here when it hit that all-time high. And for RSP, it's very pretty much straightforward chart. Nothing too alarming to look at when you're looking back here. Then we're going to go look at, obviously, my favorite name of all time, SMH, the Semiconductor Index ETF from Van Eck. So let's go ahead and get this up here. As you can see here, right around the whole time the Iran war was going on and everything, at the height of it, I should say, when it was like headline after headline, everyone was talking about it. We had this nice window of consolidation, right? That happened for pretty much a month and change, right? That people could have been, it's opportunity here. Could have been buying in, building a base, getting you one or two shares, even if it's fractional, putting your $50 in here, $20, whatever it is, right? Taking advantage of these prices, right? And then seeing this run up to where it has run up to, right? So obviously we see that it too has hit a point of, let's get over there, exhaustion when we look at hit an all-time high, then nice little sell-off, right? And then it also has this gap here to fill. So for it, its gap is between 400 and 415. So that's this little window to fill right there of orders that haven't been fulfilled that are sitting right there in that gap. So semiconductor is one of those, it's a volatile space too, right? So for it to fall to the 400s, even though it's at 581, that's nothing that's too surprising, right? All-time high is 581, and we could see between that day and the next candle, this is legit 2 days, right? This is 1 day in one trading session, basically, right? From Thursday to Friday, the name swung about $30, right? So to say that it can't fall to here, you'll be naive to say that, right? You'll just be wild for you to say that's not possible. But that's what we're looking for, to fall to this gap. And also, obviously, we're going to be looking for it to fall and hit a moving average, right? So on the daily, as you know, I believe in the 100, 200, 253, obviously 400, as you're like, that's like your generational, that's your institutional, once in a lifetime type situation, right? But if you want to wait 50, you do a 10%, 20%, which we're going to tap into when we get to the memory names. But that's your opportunities, right? And obviously here you see what I mean by you could stay overbought for a long period of time. So since way back here, this was middle of April, SMH has been overbought, right? Going all the way to over here, right? Overbought. So, but you still could have, if you wanted to purchase, get in there and still took advantage of it, right? But obviously your best opportunity was right around here when it was hitting the 100 here, hit the 100 here, fell below it, reclaimed it. We had multiple days, multiple sessions here. You could have took advantage of SMH. And obviously, we'll look at the weekly. And on the weekly, you're going to see that same situation, but there's no opportunity on the weekly. So that's why, again, I like to highlight looking at both charts, looking at your daily for opportunities, but also looking at your weeklies for your stronger opportunities, I like to say. But if you're someone who is like just really stubborn, you don't have no flexibility kind of in your ways to obtain assets, right? Or ways to go ahead and buy your stocks and ETFs, then you miss out on opportunities, right? So if you're someone that's rigid on, hey, I only enter on the weekly chart, you would have missed a great opportunity right here. You probably would have seen this consolidation on the weekly, but for someone like me that likes to do moving averages, this consolidation, yeah, I would have noticed it. But if I was just strict, I'm only entering on weekly operations or weekly data, I would have missed this opportunity here if I was trying to deploy capital right here, right? But on the daily, I've seen these 5 weeks of data here, which equated on the daily chart to those multiple days of opportunity that I could have had. Every time I touch the 100 or around the 100, those opportunities for you to allocate your capital to. So again, use both charts. Use your daily and your weekly. Some people like to use the 4 hours. Some people like to use the 1 hour. Um, it's up to you. Find what works for you in terms of best opportunity. For me, for doing this for a couple years, like I said, I've been building my son's account from the time he was born to now, and obviously he's going to be beyond when I could pass it on to him when he turns 18, 21 years old. So I've been doing this for a few years now, and the plan's always been the same: 10%, 20% discounts, and moving averages. Fall into my key levels, and just go ahead and deploy capital to them, and it's been working all great. His account right now, I think he's about to be 4 years in. His birthday's coming up. He's already at over 140% return in 3 years and change. That's amazing. When you look at the average return on the market is 10% a year, we're definitely, blowing that out the market and blowing that out the water, right? So definitely use both charts, use your key moving averages, try to educate yourself on ways to go ahead and buy at a discount. Still do your dollar cost averaging in the background, but those times where you're sitting on a good amount of capital or you've been storing away capital for opportunities, this is the type of opportunities that you need to deploy that capital in. But you also have to be aware of what is an opportunity. That's our biggest issue, I feel like, when it comes to people who are new to investing, people that are suffering from FOMO. They're seeing this person made this much money, this person made that much money, yada yada yada. You let yourself get all consumed and thrown off your rocker, right? By paying attention to all these things and also not trying to sit down and educate yourself and figure it out. And again, you're not going to do it overnight. It is a time consuming process, but it's worth it once everything starts clicking. So now let's go ahead and dive over to the software names. They've been getting smacked, since the SaaS apocalypse situation. Everyone's talking about they're done, they're over, it's a wrap for them. Mythos got out the box. Out here sending messages to people on their lunch break. But as we know, that's not going to be the full story, right? There's going to be companies that's going to suffer. There's going to be companies that's not going to make it. It happens with every new wave of technology, new wave of whatever it is, industrial age, reconstruction age, whatever you want to call it, the internet, not being AI, whatever it is, stuff are going to get wiped out and things are going to stay around and benefit and take advantage of it, right? It's your job to go ahead and see and try to use discernment, right? That's what you've been blessed with, the power of discernment, to be able to tell what's right from wrong or what makes sense, what doesn't make sense, right? You have that ability, right? So you got to tap into it and use that. So when we're looking at IGV, the software, tech software ETF, we have some opportunities that are marked out here, right? And also some ways that you probably could have got shook out, right? So here is opportunity that you could have. Obviously, all these moving averages you hit were opportunities, right? But again, you probably would have been capitaled out, right? You would have been, all your capital would have been gone when you probably got to this level here. And if for some reason you still have more capital, could have took advantage of this situation here because of RSI hitting oversold. But again, this is a good opportunity here to see that this really wasn't the low point. Even though RSI said, hey, I hit my low point, right, of oversold. We see here it went down even further, ran up, kind of your false breakout, right? This is an opportunity here too. I think I got around here or around down here. So when we first got our crowd strike position for my son. And then some point, we've been in Microsoft since 2024. So Microsoft has been flat for us for about 2 years. But I know we bought some more Microsoft. I don't know if it was right around this time or was it earlier. But we bought some more Microsoft from this year during the whole, especially the software situation. We definitely use that as an opportunity to buy him some more Microsoft. But here we have the false breakout here. Like his cross strike position was running here. Then consolidation, sell off, mini, I guess you could say run up, hit resistance here at the 50. Because you gotta also pay attention, the fact that it's below always moving averages, each of these dynamic support, or now it's dynamic resistance, but each of these points here are going to act as resistance, right? And it's going to need to work hard to break past it. So even though it ran up here, it not breaking past this means nothing. Same thing, ran up here, it not breaking past this means nothing. And then we hit our bottom point here. RSI did not signal oversold, but we hit a bottom here. Ran up here, got kind of right into the 50. Then we finally closed above the 50. That's important. That means something, right? Same thing. Got up to here, closed above the 72. Important. Means something. But then gap down below the 72. Bounce, bounce, bounce. Kept hitting resistance, kept hitting resistance. But then the 50, which was resistance, is now support. Hit the 50, that's support. Then we seen our 50 cross above the 72, getting some life into it in terms of price momentum and everything's going more up to the upside. That's a good signal. You're going to look for your 50 to eventually come up more, cross the 100, up even more, cross the 200, then cross the 4, cross the 253. Then the 50 is going to be above all these guys. And then you're going to see this name be up in the hundreds, like in terms of probably 120s, things like that, right? Once this starts getting ahead of itself and cracking through all these points, right? But again, this is not going to happen overnight. This is the long, drawn out game, right? That you have to be willing to pay and play. So if you, there's obviously the argument of, hey, better use of capital, where can I put my money at, this and that. But again, I look at that as like a chasing type of mentality, right? I look at it as if you believe in software for some reason, right? Like me, I have my belief in software in terms of I have belief in Microsoft. The whole sector, me personally, I'm not going to buy IGV. But this is for the person that doesn't know what name inside software to buy, right? Me, I'm going to go with the big dog. I'm going to go with um, Microsoft. I don't care for CRM. I don't care for ServiceNow. No shade against them. You know, I have nothing bad against them, but I'm not a high convicted believer in them like I am in Microsoft. That's just for me. And the fact that CrowdStrike got bundled into the situation, I love cybersecurity. I love CrowdStrike. I'm going to purchase CrowdStrike. So those are my two high conviction names for him in his portfolio. That's why they're in there. So, but using IGV as a proxy to try to see what's going on and understand what's going on in that whole sector as a whole is a great opportunity for you to go ahead and use that. So you can see here, finally broke past these two moving averages. Then we got to our 100, broke above it, and we see here kind of fell a little bit, but now it's sitting above the 100 daily moving average, right? That's a very good indicator. So that's where it's consolidating at, sitting at. You want it to hold this spot for multiple sessions and obviously keep going up. This next point of resistance is going to be, you see how that 200 is sloping downward? That's its next point of resistance when it starts hitting up here to the 200. Obviously, it's going to be moving, but resistance is $99.56. So $99.56. But again, it's a dynamic price. It's going to move every day. You know, the charts move every day. The price moves, right? But as of right now, it's $99.56. But I like to just say the 200-day moving average because we know the price is going to keep on moving forward. Now, let's go look at the weekly on this. So, obviously, on the weekly, some of the parts are still marked out from the daily situation, but on the weekly, you can see here another prime example of when you looked at the daily chart, you would have been messed out your position by scaling all those buys. But if you zoomed out when approach the weekly approach, again, why you use both charts, you would have been primed right here. Oh, I hit my 253 on this candle, deploy capital. I'm still hanging around here. This is 3 weeks, 4 weeks, if you count this candle right here. 5 weeks, this candle. So a month and 1 week. So 5 weeks here, we had buying opportunity at the 200, 253, right? You would have deployed your capital here, had your little false run up, came back here, fell way down here. Obviously, you wouldn't have known this, but your next opportunity would have been your 400. But you deployed capital here. You didn't sell, you didn't buy everything here. Sitting on $1,000, you probably would have put 25%, or your 25% would have been here at your 100. Your next 25% would have been here at these two moving averages. And then your rest 50% would have been right here if it hit the 400. All right, that's how you would have scaled into it, buying in tranches. So it hit here, came back up to where you initially, got your positions at. Then I was running up. So now you're up in this area, still down over here, but now it's running up here. Going to hit resistance right around here at your 100, 72, and 50. And then also on the weekly too, our 50 is still above all the moving averages, getting pretty close to kind of consolidating. But as long as it stays strong above it, that's still a good momentum for it. This is eventually going to come up, catch up. You want this to climb above these moving averages, and then you're good to go. But again, software is a name that got beat up. Everyone's paying attention, like I said, to all the names that are running, which are great. But what really matters is taking advantage of those opportunities. And me, I'm someone I like to look for beat up names. I don't ignore what's running, but if they're a beat up name that's quality, like I said, again, Microsoft, CrowdStrike, good, great quality names that would beat up. Good opportunity for you to go ahead and build a position in. So let's go ahead, dive into Micron. And then with Micron, we talked about last video about opportunities, right, on runners. So name like Micron, obviously, we know, been running. Name like SanDisk has been running. For you to fall to one of these moving averages, probably non-existent, right? Due to the fact that on such a parabolic run. 1, 2, 3, 4 sessions ago, fell 13%. That's your opportunity, right? Remember I said 10% off the high. That's your opportunity here. Then we had Friday, nice drop again as well, right? That probably was like an 8% drop from, its all-time high. 2 opportunities right here on these candles for you to go ahead and buy a position. Now, it does not mean it's not going to keep on falling. It does not mean it's not going to fall all the way back to the 50, the 72, 100, right? Because obviously it has done it before. And this is your opportunity back here during the whole Iran war situation to go ahead and buy Micron, right? And enjoy this beautiful run up. But again, someone up here bought at 818. Let FOMO get to them. Keep on believing. It's going to go higher. It's going to go higher. Now got left holding the bag, right? They bought at 818. Stocks at currently 724.66. Almost $100 loss, right? Obviously, it's on paper until they sell. But again, you don't want to be this guy. It's a name that's running. Go ahead, wait for an opportunity to scale into it. Also, we're going to highlight here. Screaming, I'm overbought. Everyone loves me right now. Again, this is not the only thing to focus on and to operate off of why you would avoid, why you're going to stay away, right? Again, it's been overbought this whole time right here for these candles. And you still could have made money on it in terms of getting in a quality position, right? But again, I'm a firm believer in how most should operate. Again, it's not financial advice. I'm not a financial advisor. I'm not telling you what to do. But I tell you the best way, especially how I operate off of it, opportunities. Key moving averages, 10% off the all-time high, 20% off the all-time high. Those 3 things right there, I feel like set you up for success, whether it's for your own personal account, whether it's for your custodial account for your children, your loved ones, like your nieces and nephews, little siblings, whatever you got going on. But Micron offered the opportunity right there on May 12th. That was your opportunity. They had another opportunity this past Friday, May 15th. Just go ahead and look at the weekly. Weekly, we obviously know it's going to be the same thing. Parabolic all the way up here. Moving averages are way down here. And then, I got you guys here for it. We can go look at the tool on the site. So obviously, this is the wealthcatchers.com. This is my website. You can go to it on desktop or mobile. Go to tools. Go to stock research. And we're talking about Micron right now. Just putting your ticker symbol AMU. Obviously, got your card here. You got your 52-week high, 52-week low, year to date. Then you get a stock analysis, SWOT, competitors. And then I added this into it now, just so you don't have to sit there and do the math for the 10% and the 20%. Automatically tells you, after 52-week high, 10%, the price is $7.36. Obviously, when we go here, when we go and look at it, we're going to see that 736 is a price that is well for it, right? So it's at 724 now. So obviously we see that. So same thing. Go here, 20% off. You got 64.94. Same situation there for you. So let's go back over. Go close this up. Go back over here. See your 1 day. Then let's go ahead and close off with SanDisk. So SanDisk had the same type of opportunity provided, fell 18%. So it hit the high of 1600, fell down 18% over the course of these days. And obviously this last day is the 18% drop from the all-time high, right? 1600 down to this point of 18%. So again, how we said, 10%, 20%, right? 18%. It's almost falling into that, bear market territory. That's not me who came up with that. That's what, the people who followed the market, who created the rules and all that. 10% is correction, 20% is bear market territory. So it's pretty close to falling into that. Obviously, we know how important memory is to the space. But again, this was your opportunity. Same thing, we look back here in the past when it hit the 50-day moving average. That was your opportunity to be part of this run up. And then again, someone bought here at 1600. Now it's at 1407. Almost a $200 haircut because of greed. Again, you don't want to be that guy. RSI, we see here that it finally dipped away from being overbought. So that's obviously these two in tandem working together, showing that exhaustion has been hit. Also some people taking profits, things of that nature, which is nothing wrong with that. Then we go ahead, look at the 5-year week. Obviously, same thing, parabolic. Not surprised. And obviously, SanDisk is one of those. It spun off from WDC, Western Digital, I should say. Spun off of that, so obviously they don't have enough data on the weekly chart. I think it's only been trading under its own name for, I want to say, a year. So that's why it only has, like, for weekly, that's why it only has this little green line. So whenever you do put a chart on a weekly and you basically see the moving averages, or the moving averages are barely there, it's because there's not enough data available yet for the stock since it's so new, right? So that's, again, when I bring up the whole following the IPO, things like that. Don't chase them right away. Give it some time to build some data, because then that also helps you too when you're looking for opportunities for entries, stuff like that. So let's see something like Coinbase that came out a few years ago. See, it's like Coinbase, it's just now getting that 200 line integrated. But you see here, well, that's enough for you to operate. In 253 just started kicking in. But that's enough right here for you to operate. You got a 50, you got full form 50, full form 72, full form to 100. And now you got a pretty decent 200, right? Like I said, 253 forming, 400 definitely not going to show up anytime soon. But that's what I mean by like giving yourself time. Because this, let's see, when did they, looks like 2021, right? So now we're what, 5 years in? Now we have, good amount of data. Not saying that like, you shouldn't take advantage of opportunities, but again, you don't be, like I said, the person chasing just because it's a new IPO. I gotta get a share. You're gonna have opportunities. Again, this person who bought up here 444, sick to their stomach right now. Because look at this drop. Again, off of greed. Same thing, people who bought in right here shortly after the IPO, like I'm talking a couple months old. This was 368. Then it fell to $31. Sick. Obviously, you reclaimed it over here, but that's if you had the stomach to fall from 195 to $31 and hold to 440. You're not going to do that. Most people are not going to do that. So that's what I mean by quality names, quality prices. Same thing. Someone here who bought at 31, they're more than happy if they were to sell even up here at 76 or sold up here at 340, 290. They'd have been more than happy. 444. Even if they let it drop down to here, they bought at $30 and sold at 190 and change. That's what I mean by taking advantage of opportunities. Even if you didn't catch the bottom, you would have caught this whole window right here. Go ahead and put this whole window of pretty much consolidation. If you were buying around here, 40s, 50s, roll all the way up to even $200, $300, you're a happy camper. You're definitely happy with that type of trade or that type of buy and buy and hold situation. So that's what I mean by taking advantage of opportunities, not chasing quality names, quality entries, things of that nature, right? So go ahead and we could go ahead and revisit the tools just to show you. So again, this is the tools, a free tool on the site. When you go on the tool, start research, gives you a breakdown of everything. So you got your entry points. It tells you here on the 100, what's a good entry point for the 200, 253, 400. Obviously, you got your weeklies. Same thing, 100, 200, 253, 400. Then you go over here to your stock analysis. It's going to tell you what it thinks is as a good verdict. Give you a nice little breakdown. Gives you a valuation of the company, financial health, technical position, analyst sentiment, macro sector climate, key risks, bull bear case, what to watch for. Then you have your SWOT analysis, which are strengths, weaknesses, opportunities, and threats. And at the very bottom, it's going to give you a nice little wealth capture take of how we're viewing it, what we think. Then when we go over here to competitors, it's going to try to pull as much data as it can from what's available. So it does pull from Yahoo Finance and things like that. But obviously some companies that we're not going to be able to pull data from, like Samsung, because they're not traded here. SK Hynix, same thing, not traded here in the US. So these are, overseas market that they're being traded in. But things like that. You can even put ETFs in here. It could give you, let's see if it's going to give us a good work here on SMH. And then for these, it does take some time to pull. It's not going to be, it's not the flash, but usually when you're typing it in, you go through, look at your metrics here in terms of your highs, lows, the year return, 5 year, and you go through looking for your opportunities. Usually by the time you read through this, what you're looking for, and then you flip over to competitors if you're trying to see what it compares to it. Obviously, we got SOX, PSI. These are other ETFs that kind of do the same thing. then by that time it's usually loaded up for you, right? Not even 30 seconds. I know in today's world everything has to be fast, 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 but pretty sure you can wait for 30 seconds to get some quality information, and then gives you the same thing. A SWOT analysis gives you a nice rounded summary there at the bottom. So definitely go ahead and check it out. I'm going to leave it linked below for the wealthcatchers.com. That's the website. Again, you go there to use the tool. There's the shop page in terms of buying any guides. I know we talked before on the channel about growing your custodial account. We talked about, obviously investing, what to do, how to break down a portfolio, how to allocate capital. But I do have guides up here. Again, people don't want to sit down through a 40-minute video. I do have it here, very easy to read, digestible. I also have how to structure your portfolio. I know we talked about that before, especially broken down how my son's portfolio is structured in terms of his anchors, in terms of ETFs, satellite positions, things like that. And also, I do plan on adding some more positions to his portfolio when that time comes. It's either probably going to be later this year. But I can't make a video about what I'm watching. I couldn't definitely do that. Put a video about what I'm watching to go ahead and share that information with you guys, because probably gonna round out his portfolio. I think at 12 positions max, and then ride that out, for a few years, see what's going on with it. But I definitely like how his portfolio is structured right now. But I do have 3 more slots I kind of want to add to it, and then definitely will share that with you guys, the 3 names that I'm looking at to add. But for right now, that's pretty much all I have for you guys. I'm going to round it out with that and close it out with it. Definitely appreciate you guys stopping by. And again, enjoy your weekend. Take the time to rest, reflect, and all those things. And do your charting, do your research, things like that, because this is definitely the long-term game you're playing, right? This is not something that's overnight that's going to happen. Same thing. It did take me a couple years to be able to get my son to where he's at. We finally cracked $9,000 a couple of days ago, so super happy about that. 10,000's closing in, so looking definitely to see if we can get that by the end of the year, get him over that $10,000 hump. But yeah, it's been beautiful to see. So definitely try to get yourself in position to do that for your kids. And again, you can do it on a very small salary. We've been operating on doing it off of, for him, just putting away $1,000 a year, roughly like 1140. So $1,140, putting that away. Obviously, birthdays help out. If anybody, is like, hey, here's a birthday gift. Here's $20 towards his account or to his quote unquote piggy bank. There's ways to go ahead and build that wealth for your child, right? While you're still trying to work on your own self, your own wealth, your own financial situation. But again, for a lot of us, I know that we didn't have anyone to show us that path or have anyone do it for us. I think that's even why it's more important for you to put yourself in position while you're still doing it for yourself, but definitely set your child up for success that way, at least monetary success. All the other things, obviously, that's going to come with life, with growth, with learning yourself, and also helping your child learn themselves. But the financial aspect, obviously, the earlier you get a grasp on it to set them up, him or her up, better off they'll be. But again, definitely happy for you guys to stop by. Leave the links below for the guides, for the website, and got some links down there for things like Robinhood, I think Public, stuff like that. So go ahead, open those brokerage accounts, get that money invested for the kids, get that money invested for yourself. Appreciate y'all. You have a great night. Thank you.